Roundtable. I'm Allie Choco, President of the New York Alternative Investment Roundtable, and we're so glad you're able to join us this afternoon. First off, I'd like to take a moment to thank the Roundtable sponsors, which are currently shown on the screen. We are so very thankful to have such a wonderful group of actively involved sponsors from within the industry. Now for a few logistical items. If you have not done so, please be sure to mute your phones and computers. And if you've not participated in one of our virtual events before, I'd like to draw your attention to the chat function that you'll find in the lower right-hand corner of your screen. You can use this function to ask questions of the panelists, which we encourage you to do. Now on for this afternoon's topic, sustainability investing in the pandemic era, capital allocation issues. Today's panelists are Erica Karp, founder and CEO of Cornerstone Capital, and Michael Creighton, PhD and Professor of Accounting at Houston Baptist University. Erica's firm, Cornerstone Capital, focuses on directing the flow of capital towards a more regenerative and inclusive global economy by focusing on investment performance together with social impact, using research that systematically integrates environmental, social, and governance factors into portfolio design, while Michael specializes in the analysis of business opportunities and risks with complex factors and highly uncertain outcomes. And without further ado, I'd like to turn things over to Michael. Thanks, Michael.
Thank you so much, and hello, everybody. Thank you for joining us. We will try our best to try to demystify the current pandemic situation for you. Erica, perhaps I can start off by suggesting that if there was one thing we weren't expecting a mere 4 months ago, it was that the term pandemic risk would be the foremost term that would be on our lips at this point, and possibly for the foreseeable future. Erica, perhaps you can begin by telling us how you would define pandemic risk, and perhaps put it into historical context, because on the one hand, it seems entirely new to us, but on the other hand, there is nothing new under the sun.
Yeah. Well, I'm expert explicitly on pandemics. What I would tell you is, that term pandemic risk is, it's probably redundant. A pandemic is by definition, a wild level of impact, of change, of fear, of crisis. So right now, we're in the midst, obviously, of a health crisis. We're in the midst of an economic crisis. We're certainly in the midst of a social crisis, and also we're in the midst of a crisis of confidence in our systems, in our infrastructure, in our institutions, right? So, a pandemic drives all of these. And frankly, there are those that are able to talk about the complexity of, the nexus of the climate crisis and a pandemic. And they're not, you can't really de-link them. And if you go, just some basic facts, we know that something like 60% of human viruses, health issues, are caused or come from animals, right? And we know that we're in a period of destroying animal habitat. We know that we're in a period of human beings living closer to animals. So the idea of viruses and illnesses jumping species, frankly, it's not surprising. And then some people will take it to, a greater extreme and use examples of where, climate is melting the ice caps. And in terms of them being a store for carbon, we're losing that. And some people would even argue that the bacteria, the viruses that are buried in the permafrost are going to be let loose. And so this pandemic potentially could just be like, a signal that more is coming. So I don't want to be terribly nihilistic, but yeah, there's plenty of risk around.
So it sounds like you're saying that the pandemic The one that we're facing right now might be the first of a number of similar crises in the future. And to the extent that it was foreseeable, I guess you can't really call it a black swan risk if it was bound to happen.
Yeah, I agree with that.
Mm-hmm.
Look at the Gates video from years ago. I mean, he practically described exactly what's going on now and what we could have done and what we should do going forward.
Mm-hmm. Now, I'm sorry, go ahead.
When this is over, COVID-19, it's not over, even when it's over. And hopefully we find a vaccine and it doesn't become endemic. That said, even when it's over, it's not over.
Now, what do you make of the market's reaction to every preliminary news release of a vaccine or a treatment that, based on a very preliminary practice or study, seems that it might be promising in the long term? It seems that the market continually jumps up and down based on the flimsiest of announcements, looking for opportunities to either get excited on the upside or panic on the downside.
I think that the market, which very often, we're looking for signals. The market is a signal for the future state of the economy, right? I think there is so much noise and so little signal right now that it is really hard to invest. I personally am surprised about the extent to which the market is holding up. I think we're going to continue to see volatility around news flow, until we really do have a vaccine. So the volatility persists. And ultimately we know that the market is a discounting mechanism, and it all comes back to earnings. It all comes back to corporate cash flows. And, I'm thinking about, the Q1 reporting period. And people were actually looking at earnings reports in Q1. I mean, honestly, you couldn't have less information anywhere than in Q1 earnings. And even now, this is what I don't think you can. Because what's really interesting is that the trends that we were seeing already before we went into the pandemic are accelerating, right? So if we're talking about distance learning, and we're talking about telecommuting, and we're talking about personalized and distance health, these trends, using AI, using drones, all these trends that existed are accelerating. And so we don't actually know how that's going to affect corporate earnings either. I think that companies that are thoughtful and proactive can begin to give some kind of guidance and context. So this quarter's guidance, rather than this quarter's results, could be interesting. But again, I'm frankly surprised how well the market's holding up.
You mentioned online learning. Being in academia myself, I've noticed that as we were all thrust into 100% online learning overnight, right around the spring break period, it was the organizations, the educational institutions that had already been shifting into that field or forum that did relatively well. And it was the organizations that were dragging their feet in embracing online learning that fell behind. Similarly, I think if you look at the retail industry, it was the retailers that had already been moving down the path of change, of proactive change. Walmart, Amazon, etc. By the way, I never thought I would be mentioning Walmart and Amazon in the same breath, but I'm starting to do that nowadays. In any case, it was those firms that had already been moving in the right direction that saw the gap between where they were performing and where a JCPenney or a Sears seemed to be performing. That seemed to widen. And as a result, it seems to me that when one looks for organizations that are poised to do well in the future, for me at least, whether you're looking at nonprofit educational institutions or for-profit investment opportunities, looking for the organizations that were already sticking to their knitting, so to speak, and adapting and evolving aggressively. Those are the ones that seem to be doing even better, sometimes on an exponentially better basis over the last 3 or 4 months.
Mhm.
Now, when we look at the newspapers, virtual, real, et cetera, and we look at this strange dichotomy where interest rates continue to be pressed downward determinedly by the Federal Reserve and others, whereas on the other hand, you have risk factors and risk premia going up because of the dramatic uncertainty. Well, with certain interest rates going down, but with risk premia going up, it would occur to me that there might be some opportunity to play the two to one's advantage. How might one do that as one reads, on the one hand about interest rates staying close to zero, but on the other hand, for high risk opportunities, interest rates, I should say risk adjusted interest rates going through the roof?
Yeah. I mean, honestly, this is where I would get one of my colleagues on the line who really focuses on the markets, on market structures, on trading, on rates, on commodities. But in terms of, what we think about, it's not so much about the trade, but it's more about the fundamentals, And so when it comes to interest rates, when we think about, for instance, negative interest rates, from a long-term perspective, that's messed up. That isn't how it's supposed to be, right? And it's really, honestly, scary. The idea that we want to do is stimulate real economic growth, stimulate productivity, and let the Fed do what it's supposed to do in terms of employment and inflation. So I see, these circumstances as frankly a signal that something is messed up. I personally think that, right now the extent of monetary policy, the extent to which it's working, it's only kind of holding us together. I mean, because face it, we have spent the last months shutting down the economy. That's what we've been doing. And then all this money is thrown in there to try to stimulate the economy. You can't have both, right, at the same time. It just doesn't work. So the supporting of the economy is done. Hopefully, the future activity, stimulus, can drive growth. And one thing I'll say is, with regard to the magnitude of the stimulus, somebody said to me, and I have to check this, but during the Great Depression, we saw monetary stimulus to the degree of about 30% of the U.S. GDP. All right. So if that's what it was back then, it means we still have plenty of capacity right now to do what we need to do if we allocate it effectively. Again, so I apologize. I don't think as much about the trading as I do about the fundamental economics longer term.
How about the fundamental politics? I mean, in the initial moments of the pandemic, we, in that brief period of time, seemed to have a bipartisan will to issue stimulus. Do you think that's going to continue to exist, or has it already dissipated a bit?
It's dissipated a lot because there's so much important stuff going on. Obviously we have to deal with the health crisis, but now we're talking about the social justice crisis. So thinking about race protests and racial equity, I mean, this is hugely important, and it's an indication, and it's been highlighted by the pandemic, the extent to which race and wealth and income inequality exists. It's been completely highlighted. And then, of course, yesterday, we got the surprise ruling from the Supreme Court in terms of LGBTQ rights. This is huge. So there's so much big stuff going on right now that when it comes to stimulus money, I mean, it seems like we can just do what we know needs to be done. In every economic recovery, we see small businesses leading the way, right? And so when money is going to the right places at the right time, it's just sensible. So what I'm hoping is some of the catalytic activity that's going on right now, hopefully there'll be some decency in terms of understanding how to administer the support that we need, the financial support that we need. By the way, Michael, you mentioned learning, online learning. I'll tell you another example of an extreme, bifurcation of who can get going well and who struggles. And I have 3 daughters. 2 of them are in public school. 1 is in a private school. The private school was like up and running online, Zoom, everything like in a day. The public schools really struggle for multiple reasons. So the learning is it's nowhere near comparable. And that's aside from the fact that the public school system represents, meals and care and everything that we need. But that is social injustice, frankly, and that perpetuates itself. So when I talk about some of these trends that are going on, they become very obvious, and we have an opportunity to rebuild better.
So if you are looking at an organization, let's say it's a publicly traded organization or a privately owned organization, and if you would want to see that organization do something meaningful within a meaningful time frame to address the social sustainability and social justice issues that are now prevalent, what would you like to see a typical organization do, and how long would you give them to accomplish whatever it is you'd like to see them announce?
Well, the second part of that, in terms of like a time frame, that's really hard. As soon as we can. But the issue is organizations, are across the spectrum into progress. Now, there's a continuum. It's a wonderful document that I can get you. It comes from the psychoanalytic community, and it's a continuum of an organization moving towards being an anti-racist, multicultural organization that is transforming the world. So at the one end, you have truly entrenched racist organizations. Then you move towards an organization that's kind of like clubby, that maybe tolerates difference. Then you start to move to an organization that is kind of a compliance organization. And frankly, a lot of financial service firms are in this category where they're doing what they are supposed to do, but they're setting up employee engagement groups and they're kind of compliant, they're following the rules. And then there are organizations that start to understand themselves and start to think, okay, we need to figure out how to genuinely be more inclusive. And then, of course, there are those that understand the economic imperative of being engaging and then going outward and not just kind of doing a great job inside, sharing power structures, sharing decision making. But these organizations go outside to make change, to transform the world, right? And so we have a lot of examples, and that particular continuum is applied to racial equity, but it's the same when it comes to corporate sustainability, actually, because you have plenty of companies that are just talking about it, but they're not actually doing anything. So it's analogous, but I think the kinds of things that need to be done. There are loads of kind of best practice organizations that we think about.
Has our understanding or our expectations regarding time horizons change? Because one problem with the issue of climate change is that in many technologies you need to make the initial investment right now, and the payoff doesn't come, if ever, in a highly uncertain way, many years in the future. Similarly, when you're talking about changing the internal culture of an organization and how it deals with its stakeholders internally, and then how it deals with the public, you're often dealing with entrenched generational attitudes that, from a time horizon perspective, in normal circumstances, can take a very long time, can take years, or perhaps can take a generation to fully change. And it seems that what we're facing now is a crisis whereby, whether there's a tremendous push to finance the development and testing and distribution of a pandemic vaccine, or a tremendous push to finance the creation of a change of culture, or a change to finance, tremendously expensive new technologies to save the environment and save the planet. It seems to me that we're looking at a speeding up of not just the investment time horizon defined in terms of when you're expending time, effort, resources, money, but when you expect to see the payoff, when you need to see the payoff. How do we deal with that if we're accustomed to giving ourselves time and giving the markets time to react, to evolve, and to change in an era when the time just doesn't seem to be available anymore, and people no longer have the patience to sit back and wait?
Just like we talk about fundamental trends already existing but accelerating, everything's accelerating. And that's because one thing builds on another when it comes to innovation, right? And so companies and organizations that don't kind of seize the moment to accelerate change are frankly going to fall to the wayside, because we have a lot of stuff going on, right? Big data gives you insight, predicted insight in terms of making investments. Social media gives you transparency, right? Instant information for everyone. That accelerates everything. Frankly, in the investment community, the next generation of investors are going to demand social impact. They're going to demand authenticity, and they're going to demand competitive returns all at the same time. So financial institutions better be able to cater to that kind of investor. So everything is happening more quickly. I mean, think about technological innovation, right? And by the way, you have to remember, innovation and invention are not the same thing, right? So innovation is aha, but invention is aha. But with innovation, we're talking about constant change, building on other change, becoming part of kind of the whole existence of things. I mean, think about it. First, we had computers, right? Then we got the internet, and then we have AI, and we have machine learning, and we have robotics. Now we have DNA sequencing and personalized health, and then we have blockchain, and then we have, solar storage. I mean, it all builds on the other. So if you look at the periods between, those innovations, much shorter. So companies need to move more quickly too. We've got transparency, we've got the big data. We're going to buy companies that are innovative, and we think about sustainable investing. I mean, all that is the systematic integration of material, environmental, social, and governance factors, right? So this is an analytical discipline. It's not a style. It's not an asset class. It's not a theme. It's a discipline. And so in the E and the S and the G, that governance piece, first among equals. And we have a lot of data right now showing that ESG integrated investment strategies, these funds, appear to be performing materially better than a broader group out there. I would argue that that's because when we think about that G, governance, good governance means communication. Good governance means innovation. It means trust. It means resilience. And so I think this is why, the time for knowing that ESG analysis, it's not a nice to have. It is a must do. From a fiduciary standpoint, it is a must do. We have to make sure that everyone has the right language, that there's consistency. We have to make sure that we have good data. We have to make sure that there's not a huge amount of kind of greenwashing, say, oh, I'm sustainable. We have to make sure there's transparency. So there's a lot of work to do. But ESG analysis, it lets you do whatever kind of investing you want. It's about finding predictive insight. And so the fact that all these trends are accelerating means that investors and corporations are going to be left behind if they don't pick up on these trends.
Yeah, it seems to me that there are different sources of ESG data or different sources of standards of ESG data that one can look to. And this mimics what is the situation in terms of financial data as well. You have the standard setting bodies, like the GRI and the SASB, perhaps the UN SDGs, looking at things from society's point of view. But then you have privately defined data systems or data standards, some relying on trade association standards, which is the case in many energy industry sectors. Being down here in Houston, I see a lot of that. And then you have these homegrown ESG, these proprietary sets of standards and metrics, which can be successful for a reasonable amount of time. And yet, because the data systems themselves are proprietary, it's difficult to evaluate them in comparison with trade association standards and metrics and the nonprofit objective standard setting bodies. Do you tend to trust one of those sources of standards and ESG metrics over the others? Or do you think all of them should be considered as someone who might be a viewer right now listening to us goes about constructing their own approach to selecting and evaluating ESG metrics?
So, the economist, I would suggest that it depends. On the one hand, each of the entities is giving a particular kind of secret sauce to what they do. On the other hand, we do have systemic flaws in the data. Now, full disclosure, I am a founding board member of the SASB, the Sustainability Accounting Standards Board. And the reason it's so appealing, and I go to that first, is because I believe in investing in a very pragmatic way around sustainability. It's not ideological, it's not divisive, it is about enhanced analytics and pragmatism. And so the fact that SASB, we look at sector-based materiality to suggest what the standards for corporate disclosure are. All right, so that's a standard, that's a piece of infrastructure. Then, of course, you have, the ratings and data agencies. So you have the MSCIs and the Sustainalytics, and they're all doing their particular thing. The problem we've got is that you've got the corporate disclosure data, which is inconsistent, and it's hard to forecast, compare, project. So there's inconsistency in that data, which goes into the data agencies, so there's a flaw there. And then that goes into the ratings agencies, so there's potential flaw there. And then that goes into indices and ETFs. And so all along the line, there is, systemic flaw. And so what I would suggest is we can use all these systems as a starting point for inquiry. And I have great respect for entities that create kind of AI-driven solutions for gathering data too, but again, they're also subject to flaw. And so this is why I think that these are all a starting point for primary deep analysis. Any particular ESG data point, you should not invest based upon that data point, right? Mm-hmm. And so I think this is still evolving. And so the data quality issue, just like the impact measurement issue in sustainability, data quality and impact measurement are two things that just have not, we're not there yet. We're still early stages in both.
One thing that worries me about big data, data science basically, is that when you build an artificial intelligence program, AI, the program itself, needs to rely on something to learn. I mean, we all do. human or algorithmic. And when you find yourself, well, on the one hand, if you find yourself in a world that isn't changing very often or very dramatically, then the data set that AI can rely on might actually go back years. And because it's relatively stable, it's easier or more effective for it to do the kind of backcasting and other tests that you wanted to do to come up with decisions for the future. On the other hand, when the world is changing so dramatically that the past, or maybe even the relatively recent past, represents a fundamentally different world than the one that you're living in right now, AI is less effective. I mean, we all are less effective, but AI is too, because it can't draw upon the same reliable stream of data that it could have in a more stable world. And I'm a little concerned that as the world continues to change with accelerating momentum, as we continue to increasingly look for AI to give us answers, if those algorithms are relying on past data that is no longer as relevant, we might be getting bad recommendations out of a well-functioning AI system simply because the data that it is relying on is not as relevant to us as it used to be.
Yeah, that's very fair.
Mm-hmm. Mm-hmm. So how, if I could ask you, and this is an unfair question, but what the heck? If I could ask you where you think we might be, let's say 5 years from now, economically, socially, and environmentally, of course. I hope you will say 5 years from now we will not be in the exact same position we are today. But I would think that there will be some longer term impacts of what we're going through that will stick with us, but yet we'll be in a different place. What do you see in terms of our future position looking out perhaps 5 years?
I mean, what I really, really hope is that we're at a place of stability and decency and, a place that we can support real growth going ahead, right? I mean, this past 3.5 troubled years, with no leadership. In fact, with, by virtue of doing nothing, we're doing damage. And then by virtue of having no kind of moral compass, we're doing damage. So I hope that again, in 5 years, we've reestablished decency, credibility, transparency, and commitment, right? And then we can start thinking about what's going on. Frankly, we're investors, right? So we all need to think about, capital formation, all right, and innovation. And so if we're really smart, we will look across industries and say, okay, in healthcare, we can think about things like we're doing it now, but using AI for tracing. We can think about DNA sequencing. We can think about personalized medicine. In transportation, we think about how autonomous vehicles are going to be changing the world in terms of capacity utilization. In food systems, we will be thinking about how to make sure that there's nutrition for all, right? How do we maybe localize supply chains? We're going to think about that. And then when you think about climate, there's so much to talk about with regard to, reduce, reuse, recycle, and even going beyond carbon neutral, going to carbon negative. We have to talk about these kind of technologies. Water, right? Manufacturing, all kinds of technology, and financial services, access to finance. And what I would suggest is where I want to be, where I would hope that we are, is a place where we can actually look at the UN Sustainable Development Goals, the 17 SDGs, big goals, no poverty, no hunger, access to education, these big goals, I think we can make them investable. And I think we can do that through sustainable and impact investing. And I used the word access, that I think it's the single common denominator among all of these sustainable development goals. And here's where you have to think about complexity and nuance and systems, right? Because, for instance, if you want to invest in access to women's economic empowerment, right? Well, you need to get access to healthcare, to education, to capital, to broadband, to water. You need access to multiple SDGs to get access to each. So what Cornerstone has done for our investors is we have created an access impact framework. And we've created our own algorithm driven by the idea of access. We can show our clients through a heat map of what their money is going towards. We will show them their impact along these SDGs, right? And so I think ahead we're going to have, there are tools out there to do this. And we would argue that ours is very intuitive for investors and very sensible in terms of using that access lens. But going forward, everybody's going to be thinking about how do I invest in each of those sectors that I mentioned, in the trends that are going forward, that are innovative, and companies that are resilient. So I really think that arguably we're still in early days with sustainable and impact investing and ESG analysis, but it's becoming clear who's really doing work that needs to be done, and not just relying on an ESG data point or an index or some data provider. It means analysis, it means work. But I really remain very optimistic in terms of the progress. So again, 5 years from now, a strong platform based upon which we can grow, and a heavy commitment to climate. By the way, if we go after climate, we're going to be impacting in a good way the job market, right? We're going to be impacting infrastructure, all of industry. We're going to deal with social injustice because of so many jobs, so much education. So dealing with climate is going to help us deal with so much more. And to deal with it, we need solutions that are permanent, that are scalable, that are privately funded, and that have good public policy going along with them. So I would love for it to be in a place like that.
Excellent. I look forward to the next 5 years too, because I would like to be there as well. A quick reminder to members of our audience, in about 6 minutes or so, we are going to open the floor to questions, and we'll be taking them through questions that you type into the chat box. So please feel free to begin to think about your questions and to type them in, because we'll be going there pretty soon. Erica, I can't help but bring this up, this being the classic free market argument that companies should exist to provide positive financial returns and optimal returns to their investors, and they should pay their fair share of taxes and allow the government and other individuals to care about all of the other considerations that we're talking about here today. How do you answer? Because I'm absolutely certain you've heard that argument many times in the past. How would you respond to it? And actually also, how has your response changed, if at all, as a result of the pandemic?
Actually, my response has not changed. And my response is that this is just among us, right? Mm-hmm. So Milton Friedman fucked up really badly when he did not include 2 words in his writings: long term. Had he done that, we would see the stakeholder capitalism that some industry leaders are talking about now. Because if you do the right thing, by your employees, by your clients, you will be doing the right thing for your shareholders, right? So what we have had over the past, decades is a real distortion of what capitalism could be. Capitalism, notwithstanding, the challenges and the distortions and the not understanding of externalities, capitalism is still the best system the world has ever known for creating prosperity, right? But we're in a position now where, again, we add that one word, long term, and then we add a lot of structural change like transparency and social media and big data, right? Consciousness, the ability to cost externalities, right? We add all this, and we can have the kind of stakeholder capitalism that makes sense, right? I mean, even Friedman, I believe he wrote about having a basic minimum wage himself, right? Because he knew it's better if people have some money to spend, right? People can engage in the economy. So no, my view has not changed. I'm very pleased that we're seeing leading voices, pound on the fact that stakeholder capitalism can be constructive. But no, I haven't changed in terms of it.
I remember, and this goes back a bit, but prior to the Affordable Care Act becoming law, Starbucks and a few other organizations getting immense positive press, immense credit, if you will, from society for striving to offer as many would-be part-time workers health insurance as they could. Now today, I wonder whether or not we as a society continue to give corporations or other organizations as much credit, public credit, as we can to recognize them and perhaps even award them for doing things that we think are in our best interest as a society.
Ultimately, we will reward them by shares in their companies, and setting the price up and bringing the cost of capital down. I think that in the past, actually, this is an interesting point, Michael. I think that kind of when sustainable and responsible investing years ago, 30 and 40 years ago, really started, gaining some ground. And it started with faith-based investors, moved to other mission-oriented investors. But there was a problem in that I think that there was a heritage of more kind of shaming, right? Finger wagging that this is not good and this is bad and this is immoral, as opposed to pragmatics and analytics. And so I will tell you that I made, now this is 15 years ago, but I made a really conscious effort not to make this about values, but rather to make it about value, right? And granted, I might have my values that might be different from someone else's, but the most important ones are the asset owners, right? So we advise individuals and families and foundations, and it's about what they care about, not what we care about. And so I think the naming and shaming of companies was more what was done than the kind of thanking and promoting. And so, from all the years ago when I would be out there, with my sell side analysts and sell side research, it's always been my preference to say, oh my God, look at Patagonia. Oh my God, look at how Nike's changed. Oh my God, it's amazing what Apache, is doing in terms of fracking, right? So you take whatever industry, including fossil fuels, and you say, this is how it can be done. And so then you see progress. And so whether it's kind of stark progress and divestment or best in class, either way, it's progress. But yes, I prefer the kind of congratulating and raising the bar to the naming and shaming.
Mm-hmm. Yeah, and again, down here in Houston, there are many organizations in energy that have been moving progressively from oil and gas and perhaps coal to, let's say, LNG, liquefied natural gas, which is a great improvement from an environmental perspective, but certainly is not quite the renewable energy solution that many people are looking for. And sometimes they continue to say, we continue to be shamed for not going all the way into renewables, whereas the steps that we are taking are the most that we can do right now as we continue to move in the right direction.
Right. All kinds of investors, right? I mean, a number of our clients, in fact, most of our clients are going fossil fuel free. And that's great. And we're able to transition their portfolios and continue to get the competitive returns. So that's one kind. But again, we have some investors that are transitioning. We have one investor who is all about nuclear, right? And so, again, this would be anathema to some of our other investors, but some people believe that that is absolutely part of the mix that we're going to need as we transform.
Right.
So investors are everywhere, and we will help advise them all.
We have our actually a major question that came in from someone. They wanted to ask about funding for the arts. Certainly, the arts themselves have taken a huge hit. I guess it's fair to say, given the short-term pandemic issues. I think over the longer term, their funding has been put at risk as well. And so what would you say to someone who, let's say, wants to create an argument that the arts are valuable in a social sense, but that they can also be valuable in an economic sense? Perhaps they might be looking for ways to quantify that value, to solidify their funding streams, short-term and long-term. Do you see a solution for them, or something that would make their approach more effective?
So we have to make a huge amount of noise on this issue, right? Creativity is at the core of innovation. Creativity is at the core of social progress, right? Creativity is at the core of everything. But Albert Einstein, he said that imagination is even more important than intelligence. Right? So that's Einstein. When it comes to creativity and the arts, we have to find ways to get the consciousness up, and then we're such a problem, obviously, with the museums and everything else, because so much of their funding comes from admittance fees. So it really is a matter of trying to find opportunities, whether it's private enterprises or with philanthropies or supporting artists. Thinking about artists' rights, right? When it comes to the financial model, artists aren't making any money on their IP. That's crazy. So we have to think about entities that maybe can stimulate economic growth for artists' rights. So there's a lot of things we can do, and there's actually there's the name of an organization, Laura Callanan, Upstart Collab. And Laura thinks a lot about this. We've done a couple of things in partnership, but she thinks a lot about what kind of funds and projects can we finance to support the arts. And I remember Sharon Rockefeller was giving some time to my eldest daughter, who's an artist, and the story Ruby was interviewing her about funding for the arts. And the comment that gave me goosebumps at the time, she said, Ruby, art is the conscience of a nation. So the idea of public funding for the art, we need to think a lot about that too. So yeah, that's an area that I would like to be more expert on, because it's so important. My wife is a jazz singer. All three of my children are artists. So I'll be working forever. Yeah.
As we were speaking about the arts, it actually reminded me a little bit about the publishing industry, both creative novelists and even newspapers, journalism, where I think in both cases there's a different business model out there, and it overlaps the traditional business model, but the key is not to quite give up on your traditional audience or your traditional business model. As you gravitate to a new model and perhaps a new audience, that's very different than the one that you're trying to preserve. And whether it's publishing, trying to keep the print aspect of their business and yet go electronic, or it's arts, which perhaps traditionally has always been, an intensely personal, live, face-to-face experience and is now moving differently. It just, when you were speaking about the arts as an industry sector, I was thinking about publishing, very different sector, facing very similar problems.
Mm-hmm.
Are there other industry sectors, that jump out at you as being well poised? And I guess I would ask to go beyond the typical ones that come to mind, such as online communication. But are there others that you think are unusually creative, unusually nimble, and unusually poised for success?
Well, probably, there are two themes that we probably don't talk about enough. And one is water investing, and another is the idea of the circular economy, right? And with water, it's tricky to invest in water strategies, because what really you're going to get a lot of technology, metering and such, and you're going to get a lot of industrial exposure in that. But it's really critical to find ways to make that investment. Think about it. What is the value of the last drop of water? Compare that to the last drop of oil. Like, who cares?
Mm-hmm.
The last drop of water. So that's obviously just illustrative in terms of how important this is.
And I guess that also goes for the last vaccine in a batch, that might be manufactured for a while. Already you see private organizations, governmental organizations, and everyone in between trying to position themselves to get, their share of a limited amount of vaccines that don't even exist yet.
Right.
In the same way that in other areas of the world that are seeing drought, you see arguments and fights over water.
Yeah. And I don't know how these things are going to be resolved. It's so complicated. But investing in water and water technology, to me, is like number one.
Mm-hmm.
Then I think people are not talking quite enough about the circular economy, right? And the reason I'm not is because when it comes to climate broadly, pretty much all consumption is unsustainable, right?
Mm-hmm.
And we know that if the emerging world consumes the way the developed world has consumed in the past, the trends, we're all dead, right? So we must start thinking about consumption. And so the notion of a circular economy means that from the very, very start, we have sustainable design. And so the idea of, not linear going to a waste facility, a landfill, but rather circular. And so a product's life, kind of begins again. But that design has to be from the start. And so with circular economy, we like to think that one day there won't even be a concept of waste, all right? And that is enormously important for our civilization, for climate change, for human beings. So this is new, but here is where we have lots and lots of experiments going on in the world. There's lots of companies that are engaged in this. Walmart, you mentioned earlier. Walmart's doing really important stuff in the economy. And so that's the other thing that I think we need to talk about a lot more. So those are two of the examples. And obviously, I probably don't have to say this, but when it comes to women's economic empowerment and gender equity, we just have to keep moving faster and faster. And we cannot underestimate the value of half of the global population. So there's a lot of work to be done in terms of, making sure that, the women are making decisions. And women have power, that women have wealth and income equality. And so I wish I didn't have to say that, but we still have a very long way to go on that one. So a lot of our clients are very much invested in women's economic empowerment.
This might be, given our time, this might be my final question or topic. But as you refer to going to a circular economy where there is no longer net waste leaking out of the system that needs to be dealt with, I think about the effort and the persuasion that we would have to impose on ourselves and others to sacrifice to get to a net negative carbon position. And then when I think about the behavioral sacrifice that we would have to persuade people to take on to get to a net negative waste position, because we would have to go negative before we go from immense waste down to zero waste. And then when I look at this morning's headlines or this morning's news photo, and I see how far we still have to go to persuade all of our young colleagues to sacrifice and not rip off their masks and go to their favorite bar and congregate in the street, I wonder whether or not we are hoping for a level of self-sacrifice that, whether it's from the emerging world or from ourselves, that we're just not going to get, absent some truly new and effective approach to improve persuasion. Are you as, I hope you're not as pessimistic as I sound right now, but to close out our conversation, perhaps you can persuade me that we should be more optimistic than this.
So if I were as pessimistic as you are, and have the worries that you have, I wouldn't say it out loud right now. We've got issues, but here's what I do honestly believe. I honestly believe if we had the right leadership, we could move forward. I honestly believe that innovation and cooperation can lead to impact. All right, but if we don't have leadership, it's all a non-starter, and we're going right where you think we're going. So I could leave it at
Thank you. I feel more positive based on that comment, and I guess I would add in closing, before I kick the conversation back to our roundtable leaders for closing comments, I guess I would say in closing that leadership can come from many, many different sources. The people who are marching in the streets right now, whether you agree or disagree with them, I think are demonstrating leadership, and they certainly are not coming from a top-down leadership model. So I agree with you. I hope you prove to be right, and I hope I prove to be overly cynical, but I am confident that we will always find leaders in places that we don't necessarily expect to see them. Of course, it would be more helpful if they are supplemented by leaders in places where we do expect to see them as well. And on that hopeful note, perhaps I'll close down our conversation. Erica, thank you so much for your time and for your insight. I enjoyed it very much.
Thank you both, Erica and Michael. Very interesting. And thanks for sharing your thoughts on a topic that continues to be more and more important. You made some very interesting points for all of us to think about. If anyone is interested in reaching out to our speakers individually, please make note of their contact information, which is currently on the screen for you to use. I just wanted to point out our next couple of events. The Roundtable's next event is entitled The Next Decade of Alternative Investing from Adolescence to Responsible Citizen, and that'll take place on June 23rd at noon. You can also sign up for that webinar on our website. Then on July 1st at 6 p.m., we're going to try something new, which is a pre-Independence Day virtual cocktail networking event where we, the members of the Roundtable, will have the opportunity to take part in small networking groups that will take place in Zoom breakouts. And then lastly, our July event is entitled How to Think Like Leonardo da Vinci, and will take place July 15th at noon, which I think will be a very interesting presentation by the author. So we hope you all enjoyed today's presentation. Please stay safe, healthy, and enjoy the rest of your weeks. Thanks very much again, Michael and Erica.
My pleasure.
Bye.
Bye-bye.